So welcome to another NJ Thrives Thursday. We have this on Thursdays at 12 p.m. It's a weekly webinar series for New Jersey small business owners. I'm your host, Christian Pichardo, NJSBDC Marketing Consultant and CEO at nilamomedia.com. So we're the America's New Jersey Small Business Development Centers Network. So the NJSBDC, we're basically a statewide program that is powered by the SBA and partners. And we help small businesses in New Jersey with no cost small business consulting, training and events starting at $0, and exclusive small business resources. So today's agenda, we basically go over a couple of headlines. Then we'll hop into the webinar, and after that, we'll have a little Q&A session. So without further ado, I have some headlines that were from, I believe some are from this week. Most of them are from the previous weeks, but are still relevant. So we'll jump into each one here. So this first one is applications open for the NJEDA Offshore Wind Tax Credit Program. So keep in mind that NJEDA has a ton of programs. If this one doesn't really fit your business, NJEDA probably has something that does, including the SBA, which is one of our next, I believe it's the last one there, last headline here. Second from NJEDA's NJZIP, New Jersey Zero Emission Incentive Program. So I thought this was super interesting. I shared it on our Instagram page. Basically, they're giving you money to get a zero emission vehicle if you're going to operate it in Camden, Newark, or New Brunswick areas. It says here, as of December 1st, in Greater Shore areas as well. So I think this is, you're adding an asset for free to your business. Basically, the program provides vouchers between $25,000 and $100,000. So if you're qualified, I think this is an incredible opportunity. If you're running maybe a delivery service or, what have you, there's so many creative ways that you could probably take advantage of this for your business. A mobile car wash, So there's that. The third one here is a little bit older, but this program just opened December 6th, so 3 days ago. And this is for startups in the tech space. Yep, there you go. So it's for New Jersey-based startups, again, in the tech space. So this is another grant opportunity. You have to be developing life sciences, therapeutics, and innovation projects. So, make sure you're reading these articles, making sure you're actually eligible to apply. And then the last one here is where SBA announces some updated guidance regarding application deadlines for their COVID economic injury disaster loan program. So you'll see here, most of them is where they're accepting applications until December 31st. So you still have time. It seems that one of these, you must apply by December 10th, which is tomorrow. So if you're eligible, or if you think you're eligible, make sure you're reading this document, this article, sorry, making sure you're eligible. If you don't know if you are, contact an NJSBDC consultant. Again, service is no cost. So you might as well get with an expert, get your paperwork in order so that you can get to these programs before the end of the year. But that is that. That's our headlines. We dropped the links into the chat so that you can save them. But now, 3 things to keep in mind before we get into the webinar. Please type in your questions into the Q&A box. If it's in the chat, it gets buried between all the messages and conversations. So if you put in the Q&A box, it's in a good area for me to notice them. Number 2 is you're going to complete a 3-minute survey after this webinar. You're going to get redirected to it as soon as this ends. And after you complete the survey, you'll get access to the webinar recording and the materials. So that means the speaker's presentation. And number 3, this event makes you eligible for the Upgrade Your Business certificate. We are running it until December 31st, so you can still get your certificate if you submit it. Submit a form on this link right here by December 31st. And with that being said, I'd like to finally welcome Marcela. She is an NJSBDC Specialty Consultant and overall amazing person. So today she is presenting Understanding Small Business Finances for Success. So welcome, Marcela.
Thank you. Call me Mars.
Mars, thank you. So I'm going to go ahead and stop sharing your screen so you can, the floor is yours.
Thank you so much. Welcome, everybody. So glad to be here. So today we're talking about financials for a growing business, right? Managing your business by the numbers. This course is at a very introductory level. So if you're very advanced and your expectations are much higher, you probably need to have further webinars or consulting that we offer at the SBDC. So don't want your expectations not to be met. But even if you're advanced, you're always able to learn something new through revising information. I do not want to overwhelm you today in what we're going to be doing. So what I want us to do, if you're okay, is the first 40 minutes, listen. And instead of writing in the chat, please write on the Q&A because I heard Chris's information and I wrote that incorrectly. So it should be Q&A when you have a comment and a question. And then at the end, we're going to be able to stop and answer all your questions. But during the presentation, I may ask at some point some type of questions because there's 100 people in this webinar and I need to know at what level and what should I be telling you that it's applicable and it's impactful to you. So I will stop at a certain moment and I'll be able to assess by asking Chris to help me what people are answering. And that way I'll be able to see where we are, and if needed, I will adjust the presentation. So let's talk about our goals, okay? It's basically understanding key terms and how they relate to each other. So I'm gonna give you, if you're not familiar with this nomenclature, information for assets, liabilities, sales, costs, recording transactions, cash flow, gross net profit, fixed variable income, and fixed variable expenses. Now, if you guys don't understand this nomenclature, I will go through that. At the end of the day, I do want to tell you that financials are not complicated whatsoever. People make it complicated, but it's telling you a story, it's telling you something significant, and one has to be able to adapt to what the story is telling for you to be able to grow your business and excel with your business. I like to use this quote that says, if a person doesn't know what harbor he or she is sailing to, no wind is the right wind, by Seneca, right? Because if you start and you're building and you're growing your business in such a way that you don't have the processes, the organizational skills, the infrastructure, that is relating a financial story, it's hard not only to get started, but to grow your business. So now I'm going to ask in the chat, how many of you, on the Q&A, and Chris is going to tell me, please write an S if you have not started your business, and please write a B if you're already in business. Let's see where most of my constituents today are. So Chris, if you can tell me, like, S if you have not started your business, and B if you're already in business.
All right, so it looks like we're getting a ton of B's. So B for business. That is great.
That's the majority.
Yep. We
All
got
right.
one S. So yeah, I'd say large majority are in business. By the way, if you haven't started your business yet, that's why we're here. So you don't have to feel bad about that.
Absolutely, and we're here to help you. And then the second question I want to ask all of you in the Q&A is, when you're looking at this nomenclature, that it's the learning of objectives, how many of you do understand completely what this nomenclature means? Yes, I understand all the nomenclature. No, I don't understand any of this nomenclature. And then question mark, if some of it you understand, but not all of it. Let's see what you say. So yes, I understand all this nomenclature. No, I don't understand any of this nomenclature. And question mark, some yes, some no. Let's see what we have, Chris.
We have a little bit of everything. Most are question marks, I believe. Yeah, I think most are question marks. So it seems someone gave some context and says, understand the terms, but not applying it as it relates to their business.
Very good. That's a very good comment. Thank you for saying that. And I'm going to help you through this conversation that we're having today. So this gives me the ability to talk about them and start about assets, liabilities, and equity. You know, people make, not, like I said, for those who don't understand this nomenclature, it's just that people make terms very difficult when they're very easy. If you think about equity basically is whatever you have ownership of, what you own. That's what equity is, right? So we're in agreement that anything, so equity may be cash, may be a car, it may be many things. What makes it confusing is that equity, what you own, what you're the owner of, equals whatever you have minus whatever you're still having to pay for, right? So equity, if you think about it, equals assets, and assets, it's basically what you have, not necessarily what you own, because if you owe money, that is a liability. So equity equals assets and liability. Equity equals assets minus liability, right? We're in agreement to that. Now, what happens is that there's this kind of information is put together, and it's actually called a balance sheet when you're looking at a report. So when you're looking, somebody's asking you for a balance sheet, basically what they're asking you is, what do you have? What do you own? What are you owing? That's what they're asking you. Now, what happens is that the formula that I gave you, in my mind, makes it very easy to say, okay, whatever I have ownership of is whatever I have minus whatever I am still owing. But the balance sheet creates the same information. It's actually being spelled in a different way. It's spelled assets equals liability plus equity. It's exactly the same thing as what's below, but that creates this mental kind of thinking like, but that doesn't make any sense. Well, it means exactly the same. It's just presented to you differently. So if you can see what it is, now you have the terminology of understanding equity, how it relates to your business, because it's whatever you have ownership of. Assets, it's whatever you have. That's why they say in military, let's deploy assets, right? They don't own they don't have equity on those assets, right? Those people that are going to the war, they're like assets that being deployed. Or when you have a mortgage, they are saying, what is your equity? Because you're still owing, and it's not necessarily the price of the whole house. So that's how those terminologies work together. And also something else that it's being spelled out that needs to be understood at a very, very basic level is the meaning of retained earnings. So your assets minus your liabilities, right? Which would be your equity, minus whatever invested capital you may have, that equals to your retained earnings. And all that information is actually the report that it's called balance sheet. You guys got it? Let me see what you say in the chat.
Yep. So Mars, so the balance sheet is the most common business report to get a full scope of your business's finances.
Actually, no, and that's a good question, but it's not. In order to be able to get the whole understanding of your finances, first, yes, it's understanding what assets are, liabilities, and equity. But at the end of my next slides, I'm going to be able to show you 3 reports that are basic to understand the overall of your financials. And one doesn't give you the whole picture. It has to be the combination of 3. So hold your horses. We're going to talk about them in the next few minutes, but still want to bring to your attention that understanding accounting and financial statements has to be, when you're looking at a balance sheet, understanding the meaning of assets, liabilities, and equity. And what I did in this slide is I gave you examples on a financial records, or when you're putting things together, where do those things get together? I see that somebody has raised a hand, and I'm going to allow, because I don't want it to keep talking, if a question has not been answered on the moment. So I will allow to intertwine the answers and questions. So Zaki, can you, Chris, tell me what he's asking, please?
Yeah, Zaki, can you please put your question into the Q&A box? We're not taking any live questions right now, but definitely put it in the Q&A so that we could address it if your question's on the slide right now.
And I do not like when people put acronyms, right? Like people say, oh, your OCA, your AP, your AD, your AF. What is that? Some people know. And then I like it when people say PP, PP, PPE, PPPP. Well, is that a PowerPoint presentation example, or is that the things that you need for healthcare? So I like to spell things out. So in terms of assets, OCA stands for other current assets, AR for accounts receivable. In liabilities, AP is accounts payable, OCL, other current loans. And your equity also comes from your net income, which is the second report that gets you to see the overall picture of everything, that we will discuss that in a second. Let's see what Osaki had to say. Chris, do you see his question?
Let's see. No, I don't think I see. What I do see is say, yes, got it.
All right. What does that mean? A yes, got it. I don't know what that means.
Yeah.
All right.
Well, hoping they understood.
So we'll continue. So the next thing I want to talk to you is understand. So, okay, time out. Balance sheet. we talk about the balance sheet. And again, you don't need to be an expert. This is just introduction. So in future webinars and future classes, we'll be able to dive in deeper and deeper and deeper until we are able to get you to be an expert in being able to read a story out of a report. But for the time being, we understand the basic concept of what is a balance sheet and what does a balance sheet tell you? What story does it tell you? It doesn't tell you how much money you've made. It only tells you how much you have ownership of, how much you owe, and how much you have in terms of things or money or things that can be converted. That's it. Now we're going to talk about sales, revenue, income. So you can sell products or you can sell services, right? But your revenue not necessarily comes from a product or service. And that's where people get confused. And people get confused with the nomenclature that it's being used not properly. Because your income may also be coming that you have already made so much money that you're investing and you're putting that into the business, and the investments are going into the business. And that is actually has nothing to do with your sales in terms of product and services. It may have been in the past, but not in the current. And we need to just understand that when people are asking you what is your sales number, that doesn't mean your entire revenue or income number. And you need to think about it and have your mindset into that. You also have to understand the difference between cost and expenses, which is so interesting. It's so different. Cost is what is something costing you to provide a product, or how much is costing you to provide a services, versus the expenses, that is the overall. When I buy my internet or I use the services of Chris to do my Guru marketing platform, that has it indirectly has to do with the product and service, but it's not part of the cost of my product or service. It's an expense that I have that will help me grow my business. It will help me. And what makes me so out of my mind that people don't understand is the part that this kind of concepts are sometimes used for economics and sometimes for finances. And they have different meanings. And that's why people get confused. That's the reason people get confused. So when we're talking about cost and expenses, we have to understand the difference between fixed and variable expenses, direct and indirect costs, and what's the difference between cost of goods sold or cost of service. In the category of managing a business, basically your cost of goods sold, which is equal to your cost of service, it's just that one means for a product and the other one means for a service, but they're in the same category, is directly affiliated for whatever you're selling. Now, if you're doing government contracts, the government also wants to know the differentiation between direct and indirect costs. And here it's when it becomes tricky, right? But now that I'm telling you in an ABC form of how to understand these concepts, you're going to be genius about it, because now you understand, oh, this can be a variable expense, but it can be also maybe a direct or indirect cost, because one doesn't equal the other. It may equal if it has to, but it may not. And that's the part that it makes it very complicated for people to understand that. So, so again, I'm just giving you an information of you guys not to get confused when people are asking you for information, because all this information that I'm giving you right now goes into the difference between cost and expenses, understanding that the cost equals an expenditure and versus expenses, right? It's the consumption of an item acquired. So we just need to understand that these have different meanings. Sometimes they may be equal, but there is a difference between that. And here's where I was telling you about accounting versus economic costs. So direct is direct cost of goods sold, or is it a variable cost of goods sold? Most of the times they are, but not necessarily. It depends on how you're using it. And then you have to understand that there's three ways of taking accountability of your finances. One is what is required by the IRS, by your CPAs, but that information not necessarily translates to understanding what you need to have and how you need to have to grow your business. So the ideal way to be able to create an accounting and economic cost platform is for you to have ownership and understanding that you need to be in control of that and provide that information to a CPA, that they will transpose, they will transpolate that information for taxes that will have a different number, a different meaning, that what you need to know and have your mindset for growing your business. So in terms of understanding now sales and cost, that kind of information is the information that you need to have for the second report that I was telling you, which is called a P&L, profit and loss, or income statement. But in terms of having all your records and everything put together, after you finish the webinar, I know that Chris is going to send you a survey for you to complete, and we're going to give you a gift. We're going to send to everybody who completes the survey this presentation, because what I have in this presentation is information that you may want to use as a check mark, and understanding when you're recording everything that you need to have for your business, you need to have the understanding that you need to categorize financial information, which is what you have in the bank, credit cards, things of that nature, what you have with your vendors, the people that you hire that not necessarily are part of your payroll, your client information, however you called it. I gave you several examples because people may use it, the customer or client, differently. Inventory, if you're, for example, I've been working lately with childcare facilities. And if you're in a childcare facility, you may be providing meals. You are providing services, but at the same time you're providing meals. Are you accounting for what you have in the pantry that you're able to sell? So even if you're providing services, you may have to have the need to have some inventory controls. You need to have personnel information, and you need to have miscellaneous records. So the part that I don't expect you guys to like go through this now is the gift that we're gonna give you. We don't have in 40 minutes presentation the ability, in 20 minutes questions and answers, the ability to actually give you every single detail, but we're giving it to you as a gift. So what I'm going to do in the next few slides is just go fast. Don't worry about that because you're going to be receiving it in the mail. But basically what I'm giving you is a list of what I consider you should have in each of these categories in terms of managing your business. You may have more, and that's fine. That's perfectly fine if you have more. But in order to achieve your goals and to be able to succeed at your goals, you really need to be in a mindset type of thinking mode that you have all this information. So for the financial records, I'm giving you a lot of information. Again, you don't have to read it right now because you will get it in an email, but it's a lot of information, right? And it keeps changing, and it's quite a bit, right? And then the financials, I just went really fast. Don't be disappointed. I will be sending this in the email, like I said, but the same thing happens with contractors or vendors information. There's a lot of information for customers, for inventories, for personal records. And I'm giving you a link that you can go for personal records. All kinds of different information that you need to have for your tax records, miscellaneous records. One of the things that I will stop here in the miscellaneous records, because I didn't write it down, but when you get this presentation where it says insurance records, try to compartmentalize that insurance records has to do also with risk management, which risk management is another workshop. It has not necessarily is just insurance. So that's like another 40 minutes of conversation. But part of it is your insurance records. And in addition to all this information that you need to have, in order to have a very good running business, you must have very good internal controls. You need to be able to have everything matching to each other, understand if you have inventory, not all of you have, what it's needed, how you're factoring that information versus employees. And to be able to do something like that, I always recommend that people have automated records, that they use a software, whether it's QuickBooks, Xero.
Waves app.
Absolutely. There's so many apps. At another workshop, I can give you like the amount of softwares that are available and what's good and bad against each ones. But if you have the ability to automate everything, then you would have the ability to have quality controls that shows you that you have data integrity and everything reconciles to the penny. Which takes me to my last questions that I have for this, all of you. Write an E if you're managing your books by Excel. Manage S if it's by any accounting software, and M if you're doing manually. So in the chat, say E for Excel, S for software, and M for manually. And let me hear what Chris has to say about that.
It seems like it's pretty much, I think it's almost in the middle between all of them.
All right.
So, yeah, that's what it seems like.
Thank you, Chris. So if you're manually doing this, you should have the ability to, that's like out of this workshop, you have to have the ability to automate your records. You cannot have a car running just on gas without putting gas oil. But I'm just making sure you guys are listening to what I have to say. And but you have to have the ability. But if you're using Excel, Excel is a great program. I love Excel, but Excel is not interactive. For you to properly manage a company, you have to have the ability to understand the difference between what a management software for financials does versus Excel, which is another workshop also by itself in showing you how different that is. So remember that we have private counseling. So if you guys need counseling about knowing those differences, we can do that for you too as part of the free services that the SBDC does. And in order to do all that in an effective way, it will always give you the ability to have everything to the penny, that your taxes will be perfect. You will reduce your CPA because your internal operations controls that relate to the cash management gives you the ability to have everything organized in such a way that your CPA bill will be deducted and you will hardly have to pay for anything, but also it will give you the ability to match things in a way that makes sense for you. And that is very important. Now, we talked about balance sheet. I kind of mentioned to you about P&L, income statement, a little bit. It's like getting our horses going and our motor running. But the third report that it's really, really important is to understand how much money you have. And that's a cash flow report. And what it means basically is your ability to pay your bills and be able to have money to do things. And the way you calculate it, I gave you a formula here, very easy, but an accounting software does it automatically, is being able to know how much are you making for income that you have from whatever you're selling, right? Versus what you haven't collected yet from your sales. And to that, you need to be fiscal responsible and pay your bills and any other expenses. That will give you what it's called an operating cash flow. And the operating cash flow is really basically putting all this information about what's your investing and financing activities that will give you your cash position. So at the beginning of any given period that you decide to say, how much do I have? Whatever you say, you think you have in the bank is not what in the bank is saying or what you have in your pocket. It's a combination of whatever you have, and that deducted with the compilation of what is your operating cash flow together with your investment and financial activities in terms of financing your business. And finally, the income statement is the second report that I was telling you about that I kind of mentioned before the cash flow one. And the formula is very, very simple. And it is, think about, close your eyes. If everybody has your eyes open, just close them for a second. Chris, close your eyes and just, I see that. And think about that. Whatever I'm selling minus whatever is the expense directly to what you're selling equals something. And that minus all the other expenses gives you your final number. Now you can open your eyes and look at this and see, okay, my revenue is whatever I'm selling minus what I call cost of goods sold or cost of service, which is a type of expense. That the nomenclature for that means gross margin or gross profit. People call it differently. And to that, my overall expenses are my administrative and general expenses. And those, when you have that information, people call it earnings before interest and income tax. And if you add what you have to pay the government or whatever interest expense you have, okay, that at the end, it's called your net income. And people make it complicated saying, oh, what is your notepad? Well, notepad, it's your net income. It's your net operating profit after taxes. Net operating profit after taxes. Just the bottom line. How much did you make?
So just to recap that part. So the gross profit is revenue minus the cost of good or cost of service. That is your gross. Then once you get your gross profit, then you subtract all other expenses and to get your net.
You got it. By George, you got it. Good job. So awesome. during COVID, if you have everything in place, something that we're not going to be talking today is really understanding risk management and assumptions for setting budgets. This is another subject matter, but I do want you to think of all of you who were challenged by COVID versus the ones that during COVID were able to succeed, is sometimes because those organizational skills need to be put in a certain way that makes sense. I'm going to nail down and hammer on you again the difference between fixed and variable expenses, because that is something that people get confused. I mentioned it to you before, but I didn't want to end this workshop without making sure that now you understand the difference between fixed cost and variable cost. Which one is when I was explaining to you this formula about that Chris so nicely repeated it to us. I want you to understand that people use different nomenclature for the same thing. So cost of goods sold, somebody may use variable cost. And that's where people get confused. So on that note, I want to leave you with some homework. If most of you have already launched, but if you are already in business, remember that the SBDC provides you lots of counseling and support, whether you started or not. And having an operating budget is very important. So I invite you to think about creating a budget for yourselves and list your variables and fixed expenses. After this webinar, you're going to get a copy of this webinar so you can see if everything that you have organized in your books already should be the way it is. One more thing that I want to say before we go into our questions and answers is, if you don't have this book, I see that some of the participants know me for a long time. So you already know what I'm going to tell you, which is you can rent for free or you can buy for $1 or $2 at Amazon used books, a book that I really recommend, that it's called Managing by the Numbers by Chuck Kramer. That book, it's so easy to read. And whatever you don't understand, you can ask counseling with all of us and we will help you understand. That will give you a better, deep understanding of what there is. And on that note, 40 minutes is not a lot of time to give you a lot of information, but I'm ready for all your Q&As.
Awesome, awesome. Let me pull up our screen here. All right, so would like to invite everyone to put your questions into the chat box. We're gonna start our little Q&A session here. So we do have a couple questions currently. So Judith asks, can a startup business have a variable cost? I was told a startup business does not have a variable cost yet.
Of course you have a variable cost. Well, I mean, and this is the thing that like, it blows my mind away. How can people say what you can or you cannot have? You're the owner of starting your own business. You're deciding what you're having or not having. Who is to tell you what you can have or not have? And that's what blows my mind away. You have to be complying with the government and do what the government tells you, which is basically that they want you to make money to pay taxes so the United States can still operate and use tax dollars for what we're doing right now, that you're getting this for free. Don't get me going. I'm getting all rumbled. But how can it be possible that somebody can tell you what you can or you cannot unless you have to document for taxes or you have to document something for doing something? If you decide, like I have a client, that an SBDC client who wants to build the infrastructure of doing these eco-friendly products that she's going to be selling at all farm markets. Well, she's already buying inventory. That's variable cost, right? Versus your fixed cost, what you're doing and how you're deciding it, because that's going to be a cost of goods sold that you're already having a cost of time. Now, she has a business plan. She has the reality on how to do it. So to buy it and then you don't know, you're going to be stuck with it and not being able to sell it, well, that would not be very smart. But you're the one who chooses what to do or not to do. Next.
Awesome. So just to put sort of an example there so people understand how they might be able to apply these terms to whatever products or services you're selling. So you said a variable cost could be the cost of buying inventory, which is also cost of goods.
Yep. You got it.
So that's your variable costs. Now, can we get an example for fixed costs?
You're having your rent, right?
Rent,
you're having your utilities, things, general administrating expenses.
Costs that never change because they're fixed.
But they do change because that's why people get confused. They do change because the rent changes in value. Today you're paying something that it's different, but you still have to pay rent. And that's why people get confused for that.
Right. So the fixed part is because you know it's coming every month, not so much the amount of money that it is.
Correct.
Awesome. So hope that cleared up, any confusion between fixed and variable. So next question here is from Mel, and she asks, how do I compute the fixed expenses if I sell multiple products?
So that's a great question. That's why I recommend that you have an accounting software, because you're able to document in that accounting software all the sales that you're having versus all the expenses that you're having that are directly to that. And it will give you a number together and it will crunch it together. Now, there'll be times that certain things have a cost for multiple things that are related to each other, that accounting software is able to do that for you. It's just investing in being able to do it the right way. If you're going to be in business, you want to be in business the right way. We are not in archaic times where it was so complicated when you didn't have the automation to do so.
Awesome. Next question here is JJ. They ask, what are best practices and suggestions for making assumptions around expenses when creating a 12-month projections for profit and loss statements?
Ask that question again, please.
So what are best practices or suggestions for making assumptions around expenses when creating a 12-month projection for your profit and loss?
So if you're, the answer is it depends, because if you're starting your business, it's a different answer than if you're already in business.
Yeah.
If you're already in business, you are just using that is so interesting that you're asking that. I'm the treasurer of the board of the University of the Economic Development Association. And at 1 o'clock, actually, I have a board meeting. So I'm going to stop at 1 o'clock sharp. But I just did that. I just had to calculate, what was done in 2019, because in 2020, it was COVID numbers and 2021 have not ended, versus what do I think I'm going to need for 2022. And if you're using a previous year that has been a good year for you and you compare that, you can make assumptions of what you need activities to do to be able to grow your business. Now, if you're starting your business, what you have to do is you have to do a lot of market research, R&D, research and development. That's what R&D stands for. And what you need to do is you have to see what the industry is doing and how they're doing, and use that information, which trade associations most likely have that data information, or business public libraries have that information, and you will be able to get that kind of assumptions to be able to create projections for your business.
Awesome. So next question here, Jill asks, sorry if I missed it. What is the best accounting software that is recommended?
So I am going to invite you, and Chris can possibly put that in. He's very fast. If you go to Forbes magazine, if you Google what are the best accounting software, yeah, you'll put it in the chat. What happens is that PC magazine every year lists what the best softwares are, and most of them are very similar to each other. So there's not one better than the other. QuickBooks has taken a huge market share, but as much as they're growing, they give you very little customer service, versus others that may or not stay in business give you better customer service. So it's like deciding whether you want an Apple or a Dell computer or a PC, and both of them are good, but it's just a matter of choice and studying. And with what Chris was able to put in the chat, you'll be able to make your own decision.
Yeah, so personally, I use Waves apps. I'll probably be moving to QuickBooks in the new year, but Waves apps has taken care of me to get the basics out of the way. Really, they all do the same thing. There's additional services that some do. Some might do payroll for you, some might pay your taxes for you, some might give you great customer service, or even provide a bookkeeping service so they manage numbers for you every month. So it would be your decision. Am I right?
I don't like to recommend one because all of them have something that the other one doesn't.
Exactly.
So
Yeah. Yeah.
so what you need to do is, and I won't even say what I use, because I have, and we
But is
are,
it QuickBooks?
I won't say, but what I will say is that go Google on the internet something that it's called QuickBooks Online Test Drive. Go to QuickBooks Online Test Drive, Google it, it will give you a link, and it will give you a simulator program for you to see how an accounting software works and how good it is. And again, you get stuck. That's why we are here at the SBDC, to help you, to hold your hands, and individually, no matter how small you may be or how big, we have over 100 counselors that we're able to provide you assistance and help you in any specialty that you possibly need help with.
Awesome. So we have a next question here from Denise. She asks, just so I'm clear, fixed expenses versus variable expenses is based on frequency of expenses, not amount of expenses.
No, and I'm glad you're asking that question. That's why people get so confused, right? So variable expense is basically equal to, you can say, to cost of goods sold, right? Like cost of service. A variable expense is something that it's directly associated with what you're selling. That's it. Like, write it down, right? Versus your fixed expenses are things that happen regardless whether you're selling or not selling, that you have to pay for. And that's why they're so confusing, because they're not fixed. The word fixed throws you away, because they are. And then in addition to that, there's the explanation of what are indirect and indirect costs, and that have a completely different meaning, because they can be both. And that's where, and then what happens is that many people that do, so this is another thing that I'm going to tell you. People in academia manage things with what it's in the books, but you are all entrepreneurs. And as an entrepreneur, you have to understand your financials, what makes sense for you in understanding the difference between fixed and variable expenses, that it's what's indirect to what you're selling versus what's not direct to what you're selling. And we can get you one-on-one and go over. This is something that doesn't come natural, because the word, excuse me, the words don't make sense. Because if you're saying I'm directly involved with you, what does that mean, right? How would you equate that word in the English language? And that's why we all get confused. But hopefully, with the way I explain it to you, it makes sense to you. And again, if it still doesn't make sense to you, call us and we'll help you streamline and help you understand this much better.
Awesome. We have another question here from Rita. She asks, how do I calculate cost of services sold beyond the product used during those services? Does that include things like total business rent for the year broken down by what each hour would come out to be?
No. So again, and that's the part that is so confusing. The cost of service is, let's say that you're a massage therapist. You're giving massage. Your cost of service is how much are you paying yourself to give that massage to someone, or how much are you paying people to provide massages. Now, to that cost of service, they may be products that is part of your cost of service. If you're using a lotion that you're putting into the massage, that doesn't go into your general expenses. That goes into the cost of doing that massage. It's directly, because you cannot do the massage without the lotion, because that's what you offered as part of what you're selling. So it has to be, and you do need to have somebody, if this doesn't come natural to you, you do need to have somebody that organizes you and helps you understand in which category they may be, because when you're doing taxes, a CPA will put anything that has to do with payroll in the overhead, in what it is, the general administrating expenses. But you, as the owner of your company, you have to have the ability to separate those expenses into what is for the secretary, admin, person who was helping me in the front desk that has nothing to do with my massage, versus the masseur who's giving the massage. And I have to separate those expenses because one goes in one category and the other one in the other category. For what reason? What's the reason? The reason is for you to have a picture of how much you're making and how much it's costing you to be an educated business owner, not for your taxes, not to try to convince anybody else, but yourself as the CEO of your company, building the correct platform for your business.
Awesome. So we have one last question, and I think it sort of falls in the right time. And it asks, well, Janice asks, sorry, when working from home, is rent considered a liability?
That's a good, what a great questions you guys are asking. You know, the answer, the question you're asking, it all depends. If you're doing something that somebody may sue you because of what you're doing, it will be a liability. If you're working from home, the CPA for taxes is going to tell you to just use a percentage for taxes, but you can put the entire rent for you running your business, that rent means how much I'm paying instead of doing it from an office space, because had I had an office space would be another number. So you have to have the mindset as an owner to decide whether it's a liability or it's something good for you, it's good or bad. For legal purposes, you know, that's an attorney, a CPA, but for you, for running your business, you have to decide what is best for you. And if you don't have the ability to make that decision on your own, that's another reason to use the over 100 counselors that the SBDC they have, because they will tell you, we will tell you, I'm one of them. We will tell you what makes the most sense based on all the information you are providing. Thank you. I really appreciate you all. It's been a great pleasure, and I hope you keep joining this series of webinars. They're amazing. Thank you, Chris.
Yeah, thank you, Marcy. I know it's time for you to go. So I will talk to you soon. All right, everyone. So how did everyone like Marcela's presentation? I think it was amazing, right? So next week, we have Boynton Weeks, and he is a franchise consultant. So if you're not into trying to start a business on your own, trying to figure out the systems, the people, what's my budget should be, you know, all this stuff, you can start a new business with plug and play business models. And as you can see from the title of our speaker, we're going to be talking about franchises. You know, how to own a local Arby's, how to own a local Subway, Dunkin' Donuts, maybe even a McDonald's, you know? So that's for next week. So you can find us on social media. Here are the links. Take a quick picture with your phone, follow us later. Because the most important thing is for you to get counseling for your business. So to get started with the NJSBDC, again, it's no cost small business consulting, training and events starting at $0, and exclusive small business resources. On the right, you'll see the map where we have a center that covers specific counties. So in your county, you have an SBDC center very close to you that could help you. And you could find them at the link at the bottom, and that is njsbdc.com/request dash, or I think that's hyphen counseling, njsbdc.com/request-counseling. And that's where you'll find a list of all of our centers and the counties. Just match up whatever county your business is in, not where you live, where your business is located in. And click the link on the right and get registered. No cost. We don't ask for credit card. We don't ask for any type of payment. We are a service funded by the SBA and state partners. So that being said, I want to thank everyone for taking the time out of your day to join us. I will probably see you next week. And yeah, thanks again. Bye, everyone.